Good afternoon. Welcome back. Market's having a decent day today. A decent day for those bulls and long positions where everything is possible. Anything is a buy. Growth is growing. Value is value. There is no volatility. Bonds, plenty of demand to buy all of them. No big deal. We've all got money. Buy the bonds, buy the stocks. Governments providing assistance to their citizens. Semiconductors, we have a supply shortage? No problem. Here's some money. There's an answer to everything in this new world. Some will call it a new world order. Gotta be careful. The Fed controls all of our lives, right? That zeitgeist out of my mind. It's happening, but for the better. For the better. Closing action. Not much going on here. Barely any take profit. It's just continuing, a continuation of the move. We'll look at individual tickers here and get a minute and 30 seconds. Yeah, you can't really. All the decisions were made from the beginning of the day, and confirmation of everything, and we'll go back over everything here in a little bit. But let's see if we get anything. Growth would be the area you would expect to get some sort of take profit. There's nothing. It's not even. It's literally nothing. It's not even 10 basis points. So you get to wait till tomorrow, basically. You're in positions. Besides those positions that you've just sort of you've put on a sharper trend the last 2 days, rallied into all-time high. Those are the positions where you take those short terms. We talked about that a little bit at the open. And now your positions that you're in should be longer term oriented so that you can trend with it. Give yourself legs, but you still want to be able to capture that short-term move with what you've got because you need someone to pay for that. You need someone to pay for it. You're not going to get them to pay for it tomorrow. That's just not unrealistic, right? So that's where those like April monthlies, you get out of those. You get out of those positions before you get to some sort of uh, high point, the top, and then it reverses. You sell before that happens. That's always a reality. So 10 seconds. We're done. There it is. There it is. Okay. Uh quite a bit quite a bit to go over. Let's just take a look. Let's go from the bird's eye view. The daily. Nasdaq is all-time high. S&P is all-time high. The Dow is all-time high. Well, it was already at all-time high. Everything is at all-time high together. There's nothing that it doesn't. Everything has exposure to the all-time high. And we saw our theory was a couple weeks ago. We were betting on growth to break out of its consolidation. So we preempted the trade. But we were not just betting on it to break out of its consolidation, which is this point here. We were betting on it to direct itself in a one-way path, a war path to the all-time high. And what that connects and creates is that when price does approach all-time high, it causes the acceleration of everything to start to pick up. And once it does reach all-time high, it then also causes anything that's not at its all-time high. It causes all of those tickers to just spring out from where they are and go chase to the all-time high. So putting those all in connection and getting confirmation of those makes it a good plan. And where we go from there is now the difficult part, right? And so that's where, okay, we bet on all these things to happen. We bet on growth to break out of its consolidation, making itself on a direct warpath to the all-time high. And as we reach all-time high, things start to accelerate. And then once we get to the all-time high on the NASDAQ on growth, which was today, what's going to happen is all the tickers that are actually down here still are now going to catch up, beating whatever tempo they were losing through this whole area. They're going to start to catch up to here because that's how price action would work. Okay, we got this confirmation. Now here we are. And so what happened today? We got exactly everything on that last step which was Nasdaq hits all-time high, and then you start to look at these tickers, and it's very obvious, right? It's not like it's okay. You can see this straight line here, but it's very obvious where positions that were not doing this start to just come off today, and they wake the f up because Nasdaq went all-time high. It starts to remove all the resistance, not specifically levels, but it causes demand's not like increasing a significant amount on something like here, right? When we look at this chart, demand's not significantly increasing here. It's really just the level of supply is decreasing because we now have the Nasdaq at an all-time high. Everything's starting to push together. As everything pushes together, supply is actually sort of weakening across the board. It's not so much that demand's picking up. Yes, there is demand picking up and the momentum gets created, but it's really that first layer that starts this whole move is that as the Nasdaq is reaching that all-time high and it hits it, the supply gets wiped across the board and it's basically a reset. And we see that when we start to look at these positions here that put a lot of points on today. Even sillier positions like PLTR, the price action it's so silly, and this is what I a little grumpy about yesterday, is that some of the price action yesterday leading into today is not very helpful. Like when you look at, again, who cares about the company here? Just looking at the price, this type of selling that we saw yesterday on some tickers, and then going directly into the price action here today is a direct representation and confirmation of the idea that as the Nasdaq hits all-time high, everything basically just goes to a reset and starts to basically tunnel vision itself that way, in that direction, and that happened. And you had to already be in a position that was betting on that. And this is where we'll keep looking at individual positions to see the price action. But again, it's about how do you capture this move? You could just be buying shares and capture the move and get exposure. The best case and the perfect trade here was to be able to capture this whole move by if you could bet exactly where it went and exactly this pace that it was on, that would be the perfect position. But the perfect position to be in now is no longer that position. The perfect position to be in now is what's going to capture the next move. Anything that you were in here is not the best position to be in anymore. It's just not. There's nothing that you could have been in within here that is now has the ability to capture these, which is why a lot of the things you saw move today, you would have needed to make moves in the last couple days, right? You would have needed to make a move in the last couple days to capture those, which is what I've been talking about, which is when we come into this move, if we're going to bet that the Nasdaq's going to continue and reach this high, you needed to put trades on that were not from before, that were new, that we're going to bet on it coming in now. Because, again, there's not a way to... if you look at any of these positions, there's not a way to put this trade on. When did you put the trade on to bet on this happening here on today? You would have needed to just put that position on, right? And so this is, again, where if you have to understand this whole macro idea, and it also needed to be correct. We could have just been straight up wrong, which will happen, and we need to understand when we're just wrong. But when we understand that something's actually happening, this is where it comes from, this macro understanding. And then it comes down to the individual trades themselves on these individual positions, and how do you capture those moves? Again, this is not straightforward, and it looks very easy on a day like today. It's very easy to look at something like Apple, and this is a normie trade. It's pretty normie. How are you capturing this here, right? Took the trade down here, got stopped out multiple times, took the trade, and then it's been on a direct path this whole time. But it's very easy to get complacent in some of these ideas to be like, okay, my position's pretty good. But you're really not gaining anything in there. You're just you're just rolling with the average. There needs to be more to it than that in almost every circumstance, because again, the points you're losing from trying to make other trades work adds up, right? So the trades that you are winning, you want them to be in a sense they're going to be impactful to you. They need to mean something. If you're going to spend money, you want it to be meaningful. There needs to be a reason, utility. So again, this kind of move here, it's very easy to hindsight capital go, oh, it keeps going up here. But what were you doing through all this timing in here, right? There needed to be more than just you bought something and you're doing it. You don't. That's not how it works, right? We all understand that there's a lot more to it. So I have a hard time when we look at every single position here, all making moves, but they're all sort of on their own goddamn thing. And yesterday really made these difficult. So some of these I know did not get captured because I wasn't able to capture them. And so when we look at some of these positions, let me use VLDR and I'll use ICLN and stuff for instance. When you look at something like this candle yesterday, 7% on this VLDR chart. This is a nice, pretty chart. I like the look of this chart a lot, and I thought it was a really interesting idea. We sold 7% yesterday and then bought up 8% today. How do you trade that? The only way you trade this is if you have an understanding that if the Nasdaq's all-time high charts are going to start to move. I highly doubt anyone bought this. I highly doubt it. Coming in from yesterday into today, this move here, I just highly doubt people are able to capture it, and that's one of those things where you just realize whether you're going to be able to get there or not. That's like the PLTR thing. The only reason why people are in the PLTR chart is because it's a retail frenzy. This is yesterday's candle selling, and then to today's open over here. This kind of trading is so bad. It's terrible, and it did happen from yesterday into today. Being able to manage this, the only way you got these trades today, if you made them at today's open or yesterday going into close, which we made a few of those trades, right? We made a few trades into close yesterday. The only way you got those, they were not from any sort of technical or fundamental idea. They were from the idea that if the Nasdaq goes all-time high, these charts will start to make a move. That's a very vague idea in a very vague plan that's based off of a lot of different macro understandings and on sort of the strings that work its way through the market and how the flows have developed over basically the last, I would say, 3 to 4 months in the way that value has interchanged with growth and how growth has entered this phase where there was misunderstandings of how yields and inflation were going to be affecting. And then we went into 2 weeks ago, yields no longer mattered on growth. We understood a baseline, and it created this dynamic where no matter what happened with yields, growth was going to be fine. And so what it does is produces this result where inflation increases, and it's actually good for equities in general, this risk-on mentality. But there was still a level of something above us holding us down. There was tickers that were just far behind. And so understanding that by pushing past that all of that would basically get lifted so you can actually buy at that point. When are you buying? You're buying at that point. You can't really buy before. All of our trades were preempted before for a different idea. This is again where when you make decisions, it needs to be very clear on why you're making that decision. It's really easy for, like today, like some of you had a good time just day trading, but it's because you knew you could day trade in that moment because of what's happening. There's people out there right now that day traded Tesla and things like that for fundamental ideas. Because Tesla had a good quarter, they day traded it. Is there any reason why a day trade today on any of these charts, the price went up because of a fundamental idea in like the 4 hours that you traded it? Absolutely not, right? And so this is where it's really easy to make decisions today or to fuck up in situations and then blame it because of a causality of something else that's actually not there. And so there's a lot of things like from yesterday, again, that it's very important to understand why these things happen, because if you didn't, it's a learning opportunity. So it's not just about the money if you made it. It's about the learning opportunity of understanding how these things are actually, there's so many different layers and so many different reasons why price will actually make moves. And it's being able to see that and see through some of the bullshit there that you could have basically anything at all happening. And then no matter what was happening in that move, just because we reached all-time highs, price pushed through. That is basically the only reason why a lot of these things happen. And again, the idea here that this was going to continue was not a very sought after idea. Not many people were betting that price was going to really take off here again this week. You expect that price will start to take profit. You expect some short-term volatility as you trend. That price, isn't going to just continue one way. And so again, the timing there on individual tickers is all around this idea. This is, I think it's really great. And I think having moments like this is where this this level of volatility of the FOMO idea comes in, because once the price gets going here, the only thing you really can do is keep buying it, because there's like that idea of day traders are us in hindsight capital of, oh, in this kind of market you can day trade everything because everything just keeps going up, right? But that's where you want to be able to actually capture over the entire move and not just one day. And it's very easy to have like one good day and then go from the next day and then you lose your money 10 days in a row while the market's going up. Those kind of different varying ideas of whether this is like riding into a bubble and all these things, all of those anxieties and in the anxieties of when is it going to go stop, when is it going to go down, when's it going to stop, fuels the ability to actually make money by making decisions and understanding that it depends in every moment and that there's so many different things that could happen, while still understanding that there's times when your stock picking doesn't really matter, right? And that's where like this idea of the humble idea of, Kathy talking about when Tesla was coming down, it humbles the stock picking idea. But as like an ETF manager over there, that's kind of silly because they're going to be in it anyway. It doesn't really matter. It's a long-term idea. The ability of being humble on stock picking for us, and like for what I do here, is understanding that even through this move here, that there's tickers just going down and they're not actually gaining, and the timing is terrible. You can't just do one way. The market's going up, I can just buy anything. We understand that it's not that simple, even though in hindsight, every time you look at it, you could just buy it at any point and it went up. And that's that difference of those two ideas that, well, in hindsight, you could just buy anything. They all went up. But we know in the moment you buy it, you're going to get pushed out of that position all the fucking time. So how do you get into positions that are going to actually allow you to profit and prosper off of the move? They're all different based on how we look at things, our capital, the intensity in which we trade, the way in which we make decisions, the ability that you can make money in a lot of different ways and with in a lot of different areas is what allows for things to really rally, because everyone doesn't have to buy the same thing, right? And that's where when I talk about the Apple trade, I don't like that you have to make this trade here, because this is a trade that everyone will make. And so once you start to get up here, you start to not, or really in the middle of the move here, in the middle of the moon, you're not really making much money comparatively. And so it's really in the beginning of the trade, you make the money. And in where we are now is where you make money, because people don't keep betting. They start to take profit and get out of those positions, right? So then you make alpha. But this is where those other positions, when we start to look at these other tickers, you actually start to make a lot of the money over here, because, okay, did everyone look at it through the lens of this idea and were able to put bets on in this short-term understanding? Probably not. And we can see that, you can usually see it based off of profit, because now someone's willing to pay something for it that they weren't willing to pay for it the day before, even just the day before here. And this is where when we start to look at some of these, it's this move from here and being in the position you're in now, which is going to probably be the most critical in understanding that when you start to look at some of these positions, you want to be out of those short-term capture moves. This idea of this candle that just came in today, I am out of all these positions that are based on I'm going to get the points right now. Now my positions almost all set up to be in the natural trend, whatever the degree of the angle is, whether it's a 45-degree angle, whatever the usual velocity of price is. Most of those we're talking 3-month expirations, and it allows for some downside while you still gained a lot of the base points today and then the last couple days. But what you're able to do was take profit on those short terms, which again allows you to have money in the bank and at home, and now you don't have to really do anything, because the only way you're making decisions now, if you're in these kind of positions that are longer term, is that you have a baseline, and the only way you get out of those is if you get stopped out. So you no longer have to manage trades, and you've already brought all the money home. We're right. So you get to bring the money home. A lot of the mistakes that will happen right now is that, let's say, okay, you start from where we started, you get these trades right, and what you did was that you kept pushing that short-term position, or what you did is you rolled it into a new one. You basically, as you took profit on it, wherever it was, you went from one thing to the next, and continued that short-term play, that's sort of you don't know when to stop that. And so that's why you have to stop yourself. It's really easy to make these, again, like today is an example where you're able to make day trades. It's that if you did that again tomorrow, you think that, okay, this was pretty good today. I can just keep doing this again tomorrow because there's an expectation that will happen. You have to actually get out of that. There has to be these trades that I made through here. I need to scrap those. I made the money on them. Now I need a new trade. If I'm going to profit on the next move, I need a new trade. And that's where you don't really know where that is, and you have to be able to feel it out and to realize when things are changing. This was the all-time high. The dance changed. The music stopped. And now we're on there's a whole new track over here, right? If you're still in short-term positions, it's not that you can't make money. It's that it gets more difficult over here. And so that's where anything that I did in here, I'm done with. I'm in a whole new game. Imagine if you just woke up and this is where the price is now. How would you trade it? You don't want to allow anything that you did right in here dictate what you do right or wrong over here in your decision-making process. Think about it as if you just woke up right now, right? You just woke up right now. What would you realistically, if you don't even have lines on this chart, what would you realistically do? You've got 25K, you got 100K in your account, and you're not in any positions. What would you realistically do tomorrow? Would you be willing to go into the day and say, I'm going to buy everything at open? What would you be doing? You have all the time in the world. You just woke up. You've never bought anything in the last year. What are you going to do tomorrow? You're going to wait for it to pull back, break out, right? When you start to bring it into perspective of not letting any of this dictate what you're going to do from here on out, you start to appreciate some of the complexities of it's very easy to be like, well, these are going great. Let's keep going. I'm not missing. I got all of these. I missed all this and captured all this. Wow. Really, my average is pretty good here. You have to remove all that and say, okay, it's a new fucking day. I understand this makes up price, and based on that, I need to do something different, because even if you're taking a trade here to bet that this will continue, that is already a different trade than the trade that caused this move to happen. They're completely different. Just like what you saw with price today, it's very easy to look at these prices today and you could cause some sort of, there could be a lot of different reasons why they could have made a move that it did, right? When you look at it, again, I'm just using any ticker as an example, everything that took off today. You could use a lot of different ideas and try to create that, okay, this pullback led to the price action. And yeah, things that actually didn't continue with growth did take off more because they needed to catch up. But that's exactly another reason why you know that if there was positions that were pulling back while the Nasdaq continued to climb, but then today they went off, you know it's directly linked to the all-time high, which means that anything from here on out is different because they caught up. They did catch up. The thing that you won't be told in headlines and everything else, and the whole idea, if you remember a few weeks ago when we were reacting to yields and now we don't, that's because we've already priced in fucking inflation. If you don't think the market's hasn't already priced in basically the next year of inflation, then you're underestimating the ability for people or for everyone to price in and make decisions as it's happening, right? As we take on new information, we start to change our models and change our positions completely. Just like I talked about this morning, when those inflation numbers come in, I guarantee you there's a bunch of junior bankers with their fucking MDs sitting at a table, and as soon as those numbers came in, they changed the model and they changed the percent for all earnings, and now they have an understanding of what our earnings expectations are for our positions currently and how much exposure we can take on. Everyone's positions right now are already in the market, already has priced in all of that inflation. This all here is, we got out of the yield scare and into, okay, this is the reality. This pricing here is quite literally just pricing in all that inflation. At some point, we have it all priced in. Now, what the bet is that over here, if you put it in a macro understanding, the bet that I have here is that there's actually more to price in. There's actually more that's going to be appreciated, which is why it'll be more of this. And we've got that the last few days here, is that it continued, because there's actually more to price. We got to realize what exactly it is we're doing. Why does the price action look like this? This is not trading. This is not trading, is it? It's not trading. There's some tickers that are going back and forth, but that's exactly that's an opposing force to this idea that, okay, we're actually pricing forward. You got to remember what the market's doing and realize that this was an in the moment decision. This is a in the future decision, right? And that's why when we were capturing this in the moment, right? Your trade over here, is it in the moment anymore? If this is, we're getting priced, where we have an understanding that these things are getting priced, it doesn't take that long. Just like if you're selling something, you don't sell something over multiple days, you sell it all at once. The same thing is with buying. You buy, the buying is a bit more on a ladder because it's periodic when you buy, because you can't buy all at once or the price will skyrocket. But you have to realize, again, now you reach this point in all the markets at all-time high. So now, again, we're in a raw state. It is a raw state. So now you need to be trading, again, on this longer-term exposure. This is what I talked about this morning. You start to lengthen out those expirations, because now you need to allow price to actually move in a little bit more of a trading aspect. There's going to be back and forths. There's going to be those pullbacks that you have to hold through. And this is where long-term traders and investors will do better. They don't do as well when it comes to getting exposure to this play, which is what we got, and we didn't get negatively exposed to this area. But what they do well is in this next stage, when price just keeps trending, they have no headaches. The price can trend and pull back for 2 days, and the 2 days doesn't negatively affect them. The way we trade, those 2 days that the market pulls back could erase our entire options position, right? We could have bought today, and then it pulls back tomorrow, we'd be immediately stopped out of our position. Whereas if you had a long-term investing, you wouldn't give a shit what happens month to month. It's what happens over the entire move, right? Or day to day. You care about what happens over the entire move over like a year, right? And going further. So again, this is where you have to lengthen those out and understand where exactly we are. Everything got priced right now. It's done. I promise you it's done. That's it. I don't mean that price is going to stop moving. It never stops moving. But you reach the all-time high. Now it's new trading, okay? So anything that you thought going into today, now you get to scrap that and you get to think like a new child tomorrow. It's like learning a new language tomorrow. That's where we are. That's the reality. Every chart I look at today is going to be different from what I looked at it from yesterday and the last month, because I'm going to be looking at it in a new state of, okay, we're at all-time highs. I'm betting on a trend to continue like this, right? I am betting on a trend through all-time high, but I understand there's going to be market movements. It's not going to be these big monthly consolidations, but there are these movements that we're going to have to figure out whether we want to be able to time the pullbacks, which I'm saying you're not going to be able to. So you need to trade through them, push through a trade through them, which means longer expirations. But what exactly do these look like? Where are these things happening? That's where some of those new decisions come in. All of them basically lend to the fact that if you have longer positions, you don't need to time it, and you're not going to be able to time it here. You're not going to be able to time. You don't time these very quick pullbacks, right? The best trade here, if we look at the Nasdaq here, from the election up to the high, just using hindsight, the best trade here is to enter and then exit. One trade. You don't go enter, exit, enter, exit, enter, exit on each pullback, because you don't time it. You can't tell in the moment. This is different. This is a long-term consolidation. There was things building up and building and building, and equilibrium reaches. We take the trade. As you're trending through all-time high, you don't get that. And we understand that we just priced a major idea into the market. You're not going to get those macro understandings to be able to dictate short-term trades anymore. You don't get to time this pullback shit, which is why all we did was go long. We just go long, right? There's trades that will make short-term vol. Everything else is long-term until we get to another end pass and we get a consolidation. We stop trading, sit on the sidelines, wait for the breakout, take the breakout. We go back to the same thing again, right? Square one. We're back to square one. So keep that in mind, because it's really important. A lot of people made a shit ton of money today. I took home a lot of money today, and it's going to be very easy to go into tomorrow and keep thinking the same way I thought today. I'm not stupid. I'm not going to do that. I'm not going to go, wow, I made a fuck ton of money. I'm going to call my mom and be like, hey, Mom, you want me to buy you something? Because I made a bunch of money, and then go tomorrow and be fucking acting the same way I did today when I know it's now tomorrow, and it's a different game, because the one thing you have to do is realize that, okay, something is priced in here. Everything gets priced here. Price is going to continue moving, but we need to understand we're all going to be trading it a little differently, which is really that it's going to be more trending, right? I expect the trend this is not a trend. This is not a trend. This is a rally, right? This angle that you see here, this is no trend. That's way too sharp, right? This is the trend. This is way too sharp. That's a rally, something getting priced, just like those tickers I just talked about today that were not continuing this move that caught up today, right? They all caught up today. Those tickers that caught up, that's exactly what I mean. They're not going to continue to do that. They can. They absolutely can, right? These moves where they catch up, they absolutely can. But that's not how price moves. They actually move on this sort of trend, right? And that's what you want for healthy price action, where price will move back and forth. Understand that we're probably at that point, right? Probably at that point. Not to say there's not going to be trades that will take, that we're trying to capture and move very quickly. That never goes away, but not in the sense that I've talked about with the chimp brain idea that everything is doing the same thing. Okay, not everything's doing this anymore. We got there. We did the trades. Move on to the next one, right? So keep that in mind. That's why, and the reason I say this as well is because I've already taken profit on all these moves. So I've transitioned every single position basically. So you're going to hear me talk with different dialogue tomorrow than I talked about the last couple weeks. So that's why I say it's important, because it's kind of probably knee-jerk for me to talk one way and then the next day I'm talking different, but it's just because of the perspective I'm looking at it through, right? The lens has changed for me. It might be the same for you because your position's the same. Just realize that that's why my dialogue will change, because I've already sort of done these things. Like that's going to happen with the market as well, right? The market makes all its money and now it has a different view of the market. If everyone became rich overnight, wouldn't we all be thinking a little differently? That's how banks think right now. Banks are all rich right now. So it's going to be a little different, and that's where this earnings might mean a little bit more, and to see what they're doing, because the banks and institutions, for instance, have an ass load of money. They have billions and billions of dollars that they can spend. That was an overnight phenomenon. COVID happened. They had a bunch of reserves, and then they had $10 billion to spend, and they could spend it all tomorrow, right? And that's where things like hearing what they're going to do for earnings, that's probably an example on a more larger scale, right? We're kind of there. We're coming into earnings. Things are going to be a little different, right? We're looking at economic data a little bit more. It's no longer ideas. We're in the moment. We were speculating about months and months ago about inflation. Now we're in there. Now we're seeing the numbers. COVID's going away, but we're still having some anxiety. It's about seeing those things actually happen, and then we get to go from there, right? And this is where you do need exposure in a long-term sense, and you can't just short-term trade everything. And that's where it's very difficult to go from that making 100% in like a week swing trading to then having to you're not going to make 100% over a couple months. You have to tone it down onto a trend, and it's important because you need to have your money into the market all the time to be able to make money. You can't just sit on the sideline because you can't make those short-term gallon trades anymore, right? And this is where long-term investors, what they're doing is that they're not trying to time the market. They'll hold through everything, right? They'll hold through this. They'll hold through all this and keep just pushing the trade. You have to be on that wavelength as well, and yeah, everything matters in that sense. And so it's every single day is just part of a larger thing. So again, we're going to try to sparse out some of these ideas, and I'm going to try to, what I'm going to try to do, and I've talked about this a couple weeks ago, I was trying to start weekly charts. Hopefully I can get a little bit better understanding of weekly charts and everything. I haven't done them in a while, so I haven't really spotted them very well. I'm sure there's some out there, but I'm trying to look for those longer term ideas, because we don't want to get too into the day to day, looking at one candle and then going, oh, okay, here's a candle here, and that's going to mean something. No, it should we want to look at from week to week and block it and try to block trade that whole idea and say, okay, here's this week. How is that moving to the next week? Where exactly are we in that flow? Where exactly are we? Because again, it shouldn't be that we're trading from from Monday to Wednesday and then taking a trade on Friday to next Monday to then do that trade again. This should be lengthier than that. And when we're taking trades, because of, again, what we're seeing, and that is going to require a longer term view. When we look at a chart through the lens of trading, we need to know that if we're buying something, we're not looking to buy it to capture it over the next few days and hopefully get that timing correct by buying a bunch of shit. We want to be able to just keep our money in the market and have it grow every day. And not just specifically like day to day. You're going to have red days, but from week to week, let's say. From week to week and to the next month, your money's just in the market and it can grow. That's something, and I know it's just so random that it just, now all of a sudden I'm saying that, but that's just the fucking reality. So you're going to have to figure it out with me, and I'm going to have to figure it out myself. Because there's just an understanding that's something that has to, whether it happens or not, just realize that you need to be planned for that, because there is a big difference being not having your money in the market and having it in the market. And in that, even just a couple days or weeks is a big difference. It's a big difference, and I'm just saying that we're going to be a little dry on short-term positions. You're not going to have 30 fucking positions to be able to try to cast a wide net and get them. It's going to need to be longer term to be able to do that. So just be prepared to do so, because today is definitely going to fuck with people's heads. I know it will, and that's why I said it earlier. You made day trades today. You're not making day trades tomorrow. It's not going to happen. Maybe tomorrow. Maybe you're a little lucky, but it needs to be a longer view, and I'm prepared. So this is where you got to always be changing, always be prepared. I have some interesting charts, I think, for tonight. I've seen some stuff. I think what I'm going to start to do, so again, we're going to have, I want to put this in perspective a little bit. I'm not trying to change everything right this second, but we'll have longer term, definitely. It's not that I just like randomly will draw lines because I want it to be longer term. I understand that we are getting charts that are a little bit longer term. Every single week we kind of grow past the stage that we're at now, so that just kind of naturally is happening. But I think I want to be a little bit more for the group. So again, because my mentality is changing as well, so I want to keep my thought process the same when I'm talking to you guys. I'm going to try to maybe get a little bit more things written down. So instead of just posting charts and then being like, okay, here's like, that's it. I want to maybe get a little bit more dialogue going. And so maybe doing a little bit more of writing. So I'll write out my thoughts. We kind of had that if you guys remember, going into kind of the end of last year, going into the fall, not specifically the September consolidation and everything, but around that area, what was happening was we were sort of in a different, lengthier stretch. And so a lot more of the thoughts were over longer periods of time. So I was doing more writing out of thoughts, and I posted more ideas through presentations and those type of things, right? I'm going to probably get more like that again, because again, the ideas are on a macro level. They're not so much day to day. It is over weeks of time, and those are long-term investing ideas. You're probably going to see more writing pieces come out for me, so I'll post it into here. That's more specifically tailored to you guys, because again, I want to make sure I'm trading one way and then just spitballing the same thing I say to you guys every day. That's probably not helpful and kind of a waste of my own. If I'm here, I need to obviously be thinking the same way. So definitely expect some more writing pieces from me. That's always fun. So a little bit more presentations. I know I have a thing for options. The exact timing on that, I'm still not clear. I was trying to set up an actual course, so that has taken up some of my time. So I know I said like a month ago I was going to post the option thing. That's still planned, but what I was trying to do is actually do a course through an actual website and get paid for it. So I'm still trying to figure out whether or not I should just do this here and then I can still do it or not. We'll see. So that is still, I didn't forget. So we'll see. Now that we're getting more long term, I'll have more time. I don't need to spend all fucking night looking at things and setting up things for short term trades and spending every single moment of my goddamn existence trying to set up my trades for the possibility of 100 different trades in a day. We're not in that market anymore. Did that, made the money. Now I'm ready for the next one, which is, again, success isn't not just about making a shit ton of trades and making a shit ton of money. Sometimes it's just about not being stressed and being kind of, elevated amount of happiness, which is not specifically just money. It is just not having to focus so goddamn much and maybe lengthening my view of time. That's where the market is. Market's my teacher. If the teacher's telling me to slow down, we're gonna slow down. That's what the market says. Perfect. I like the idea of it. So you can sit back and not relax, but not be so, so critical of every single moment and have the possibility that something could happen any moment. We can chill a little bit now, right? Go a little bit more macro. And so you got more coming out for sure. So we'll see how that goes. That's what I got. I will see you guys in the morning. Today was a lot of fun. If you didn't have a good day, let me look at the profit section. Let me look. If you didn't have a great day today, or you haven't had a very good time in the last couple weeks, what I would say is that you need to look back. You need to learn something from the last couple weeks, because again, it's not that the trading is easy. It's always hard. It's always easy when someone else does it. When someone else on Twitter or I say it, it's always easy to see someone else do it. It's not easy. But there are so many lessons to have been learned, and really ways that you can execute trades in the last couple weeks here, really since the 25th, and then going into the 25th to know it's time to get our mentality going. You have to look back, and if you didn't make more money in the last couple weeks than you did the month prior to that, you have to figure out the lessons in there and things that I've talked about and things that the market's signaling every day. You have to be able to somehow produce some sort of signal in your brain that there's something you have to be done, something needs to be done now. Again, it's not making the trade now. This is different trading now. You needed to be in those trades capturing. There's something to be learned there. And again, you don't have time to do it. You don't have time to do it. But there's definitely something of going back and looking at price and just figuring out what it is that you have to do to convince yourself of something. And I put up some kind of weird ideas this morning of thought processes. Maybe if you weren't here for the morning, the tail end of the VOD is me talking about some weird concepts and like being a psycho and shit like that. But there might be some ideas to pinpoint there, because there just has to be something that you have to be able to let the price convince you of something. And so I would say definitely go back and look and then try to figure out in here, because I do think if you're trading with my method and stuff and you didn't have a very good time in here, which a lot of people did very well, especially in this area, then there's something you have to learn there, because again, otherwise it's not worth it. It's just not worth it, and I don't think people should be spending their money or losing money for no reason. If it's all about the learning. So there's definitely you got to go back and convince yourself with hindsight. It's fine. It'll happen. In hindsight, go convince yourself what the fuck you needed to think or do, and go as soon as it like something should click and say, okay, I see what I should have saw, and next time when I see it, I'm going to take advantage of it. Whether or not it's going to happen or not, it doesn't matter, right? But there's something to learn on this move and coming into it, and then the hundreds of charts, right? Even if you just did an analysis on myself, we could just literally do a study on how many charts I post. I was posting at least 10 times as many charts in this area. And also if you look at targets probably 10 times as far out and aggressive coming into this move. I looked back. Almost all of my charts, I got way more aggressive in this area before the move started, and posting tons and tons more charts. Even if you just go, okay, how many charts is Don posting? If I start to post more charts, that means there's more breakouts. And if there's more breakouts, that means the market's going to move. Most, like if we put it in that perspective, and it did, even just in that circumstance, to see when I changed my mind, that's what I meant of my discussion at the end of this morning going into lunch, was that I don't specifically know myself. I'm just relaying what I see in price. A lot of the times that's where once an idea gets populated into your head, you don't really know why. It's just some intuition there that there's something that needs to be done. And so that's where you can't teach intuition. Intuition just is developed, right? And that's where there's nothing I can do for any of you, and I can't make trades for you. That intuition, if you don't have it, then just fucking use mine. Just literally just use mine. I'm not going off of opinions. I literally just look at the price. Use some of that to maybe find the signal for yourself. Build confidence to go put all your fucking money into a trade, right? There's something there. There's definitely some sort of, again, something there to convince yourself. I don't know what the hell it is, and I can't tell you. So there's just, again, it's all price. No opinions or biases. It's all just price. So keep that in mind. I don't know if that even helped at all, but all right, profit, and then we get out of here. LSU 10%, 9.5%. That's an awesome number. He finally got his PDT. He can now make his day trades. Hopefully, he does not lose all his money now. Now that he can, I mean, I guess you can't because he can only make. He won't be able to make any more day trades. So, awesome to him. Definitely nice. That's quite the transformation on that guy. I think he was having a pretty hard time, and I was giving him a lot of shit for like 6 months. So, I don't have to give him much shit anymore. He's kind of achieved his goal there. So, very nice. Spoon, very good day, says. Had to take profit on the multi-baggers. Twitter spot, snap, SQ. That makes sense. Played net. The net thing was obviously funny because we've been looking at it. I think Brian mentioned this open. That's exactly where news came out, but price predated the news. So keep that in mind because, for instance, Spoon played net. We didn't trade this because we knew news was coming. We would trade it because of the price, right? So you get this price action. This is just larger, more volatility, this kind of action in here. And then it's way over here in lunch that news comes out and then the price comes, right? That's exactly where you just need to trade price. And somewhere in that price, you can just obviously look and see there's an event here. This is exactly where you just use price. You're going to be faster that way, more nimble. This is not an easy trade. This was kind of silly, and I talked about it, how this kept getting pushed down. There's no reason to be critical about this position. Sometimes you capture it, sometimes you don't. It's about just being aware and looking. I wasn't here, so I didn't capture it. Need to reassess current positions. Opportunity cost. Shop. Would appreciate Don's take on this. With the shop trade, you just again, this is where this is on that trend. You're pushing for a long-term understanding, and that's where again, there should be some sort of understanding of my charts. The difference between this is 32 bars, right? That's that's over a month of normal time, but 32 candles of trading here and trending, that's a lot of percent. This sort of thing, you need to make its moves while being in that position. There's no such thing as being in May monthlies, for instance, on this. April monthlies, May monthlies, you're never capturing anything here. If this is a plan, then you need to position that you can capture that, which means again, this is where the capital problem comes in, where there's going to be times when you can make money over a shorter amount of time and you'll make more in that time, but then how do you continue to do that? You'd have to move to another position. You don't know when things are going to be going. Right now, you want to be capturing things over long term. It doesn't matter if something else is outperforming this, because if this plan is true and these plans, if these sort of ideas do happen, then you're capturing this move over that entire time with the money that you're not removing from it, right? This is where having my money in every day will always beat you guys or beat somebody that is in and out of trades every single day and week to week, and their money isn't always in the market. Just being in a position and pushing it, whether it gets to a certain target or not, is always going to be better because you get exposure every day. And opportunity cost, there's an opportunity cost, there's a risk in getting out of a position to enter another one for new timing. And so that again comes down to capital. It's very easy for me to again, this is where it's so difficult, the difference between having enough capital to do so, to sort of go capture everything, and if it's not working, I can exit it because I know I have enough money to go buy something else, right? That's a very different thing for someone that's got 20 grand or 25,000, like we're looking at LSU here, and you got all your money into one idea, and if it doesn't work, then you have to exit that to go put it all in something else. That sort of trading requires something different. And I would say if you're in this position, you don't exit it. You let that go, but as long as you have the legs to do it, right? As long as you can give yourself a month to push that trade while still taking losses every now and then, right? You can push through the pullbacks. That is always going to be a better play, and that's what we're looking at right now. So remember what I just said. We're looking for those longer term trades now for sure, because we're no longer looking for this move. We're looking for the whole thing, right? Capture the whole thing. It's going to require some long term. C Trader 720 has been fucking killing it. So awesome job, buddy. Awesome job. Again, the hard work pays off. So the difference between however you guys do it, whether you listen to my dumbass or are you just looking at things more and feeling it more, and a lot of the times it's just having confidence in making trades. The market's always kind of going up, and the memes that stonks only go up is pretty true. It's just how do you mitigate those times when you have to get out of positions and get hurt? You minimize your downside, your upside is always there. So sometimes it's hard work, and sometimes it's just the mental part of it, right? And that's where the experience definitely helps. And that's where the people think that if you blow up your account or you lose a lot of money, that will help with that. That's not that's not it at all. That's not it at all. There's something else there. And a lot of times it is being by this is the lie that people tell, is that it's the losses and mistakes. Mistakes are absolutely important, and you have to learn from the mistakes. But really, to me, the biggest difference between successful traders from my own experience is that it's when you're doing well and you have a good strategy, which I think I have the best fucking strategy and method out there. I'll say it. I'm fucking arrogant in that sense, but not to the point where it caused me to do dumb things. I understand the difference, but it's through being successful and making profit, which you have to get to that point, of course, and learn things along the way, and you'll make mistakes on the way to get there. But it's once you find success and you find something that works, it's through that success in making money that makes you disciplined. That's the fucking difference. It's that discipline part that comes, and then you do it every day. And every single day, no matter what, you do the same thing. Even when it's not working in the moment, you know it'll work the next. And that's where you hold that confidence over. And I've seen a lot of people in here grow through that, because it's now been such a long period of time that discipline has really taken over, and you don't really know what else to do. It's very hard for you to stop doing this now. It's like not a very, there's some people that are going to be, that have left us for like, they go to school and things, but it's even there. Like, it's very hard to stop if it's working, right? And that's where that discipline comes in, that it's only really if you've been successful with it and it's worked that will happen. It doesn't matter how many times you lose and you learn from mistakes. If you don't start something good, then you're not going to do good. That's it. So do well. Not doing good as in being a good person. We all suck. Anyway, folks, had a lot of fun. Watch out for charts tonight. Short-term patterns, I mean, there's going to be some bearish patterns and stuff because we've had big trends. Just realize that bearish patterns are likely leading into less sharp of trends and not downtrends. Realize that bearish trends, if it's a bullish bias, it's likely short-term patterns are leading into just less of a sharp move. Like now you're going to trend this way, right? So realize the difference between those, because probably an important point. I'll see you guys in the morning. Have a good night, evening, afternoon, wherever you are. Until then.